The coins building the internet of value while nobody's watching. Every bull run has its distractions. This time, it's Bitcoin smashing into headlines, Ethereum fueling endless debates, and every influencer on the planet arguing about price targets and ETF dates. The spotlight is locked so tightly on the giants that nobody's paying attention to what's happening just outside the glare. And that's exactly where the real story is. In the shadows of Bitcoin and Ethereum's hype cycle, three underdog networks are quietly engineering the backbone for what could be the biggest transformation in global finance since the internet itself. Not just sending coins back and forth, but moving any asset, anywhere, instantly with trust built into every transaction. This is the Internet of Value. Hedera's HBAR is creating enterprise-grade rails for micropayments, tokenized assets, and even real-time carbon tracking, technology so fast and energy-efficient, it can handle hundreds of thousands of transactions for pennies. Xinfin's XDC is bringing blockchain to the global supply chain, where billion-dollar shipments and cross-border trade deals live and die by paperwork. With XDC, those documents are secure, instant, and verifiable, removing weeks of delays and millions in losses. And Stellar's XLM? It's unlocking the door for the unbanked, millions of people left outside the global economy to send, receive, and hold value at almost zero cost, across borders, without needing a traditional bank account. These aren't the headline grabbers. They're not chasing memes, influencer endorsements, or viral hype. They're signing enterprise contracts, integrating with governments, and embedding themselves so deeply into the future infrastructure of payments, trade, and compliance that one day, using them will be as normal as using the internet itself. While most investors obsess over Bitcoin's next halving or Ethereum's next upgrade, these three are quietly building the rails that BTC and ETH might end up running on. By the end of this video, you'll understand why overlooking HBAR, XDC, and XLM could be the single biggest blind spot in your portfolio, and why learning about them now might just put you years ahead of the market. Stay with me because this isn't about the next pump. This is about who controls the plumbing of the world's money. The Internet of Value, what's really at stake. 25 years ago, the internet didn't just change how we communicate. It rewrote the rules of global business, media, politics, and culture. The simple act of moving information faster, cheaper, and without permission toppled entire industries. Letters became emails. TV became streaming. The corner office filing cabinet became cloud storage. It happened so fast we almost forgot how slow the world used to be. But while information evolved, value, the way we move money, assets, and ownership, has been stuck in a time capsule. Right now, if you want to send money overseas, you still have to navigate the same labyrinth of middlemen that's been in place since the 1970s. Banks, clearinghouses, correspondent networks, each taking a cut, adding delays, and introducing points of failure. A single transfer can take days, cost more than it's worth, and still arrive with errors. It's not just a nuisance. It's a barrier. This outdated plumbing is the reason millions of people remain unbanked. It's the reason small businesses in emerging markets can't trade globally. It's why humanitarian aid can take weeks to reach disaster zones. The Internet of Value is the answer. Imagine a world where you can send anything of value. Cash, gold, stocks, property deeds, supply chain documents. Instantly, anywhere, at near zero cost. Not in days, not in hours, in seconds. It means a farmer in Kenya could receive payment from a buyer in Germany without losing a week's income to fees. It means a multinational could settle cross-border invoices in minutes without locking up capital in the banking system. It means the very concept of banking hours becomes as outdated as a fax machine. And the magic isn't just in speed, it's in trust. On the Internet of Value, every transaction is verified, immutable, and visible in real time to the parties involved. Fraud becomes harder, disputes become rarer, and compliance becomes automated instead of a paper nightmare. Here's the twist most people miss. Bitcoin and Ethereum sparked the blockchain revolution, but they weren't built for this kind of high-speed, regulated real-world value transfer. They lit the fire, but they're not the pipes. That's where the underdogs come in HBAR, XDC, and XLM. They're not chasing hype cycles. They're laying the digital railways for the next era of global value exchange. While the market obsesses over BTC's price chart, these three are quietly signing deals with enterprises, governments, and institutions that will define how money moves in the 21st century. Next, we'll zoom in on HBAR, the technology, the partnerships, and the use cases that prove the Internet of Value isn't a future dream. It's being built right now, and HBAR is already running trains on those tracks. HBAR, the enterprise engine of the Internet of Value. Hedera's HBAR isn't trying to be the loudest coin in the room. It's trying to be the most indispensable. At its core is the Hedera Hashgraph, a distributed ledger that doesn't even operate like a traditional blockchain. Instead of blocks and miners, it uses a data structure called a hashgraph and a consensus mechanism known as asynchronous Byzantine fault tolerance, or ABFT for short. The result? Finality in seconds, transaction speeds that can handle hundreds of thousands of transfers per second, and energy consumption so low it makes even proof-of-stake chains look heavy. In a world where businesses demand both speed and sustainability, Hedera isn't just competitive, it's tailor-made for the job. And here's where it gets even more interesting. The Hedera Governing Council. This isn't a loose group of anonymous validators. It's a hand-picked roster of global heavyweights, Fortune 500 companies, tech giants, financial institutions, and universities, each running a node and helping guide the network's evolution. These aren't speculative crypto influencers. They're established corporations with reputations, regulatory responsibilities, and billions in revenue on the line. That governance model gives enterprises something most blockchains can't: predictability. A stable, compliant environment for launching products that need to operate at scale in regulated industries. BAR's use cases are already stretching across multiple sectors. In payments, Hedera enables real-time settlement for microtransactions, perfect for things like in-game purchases, content streaming, and pay-per-use business models. In supply chain, it's being used to track and verify product origins in real time. And in environmental markets, it's powering carbon credit tracking platforms, ensuring every credit is genuine and accounted for. None of these are theoretical. They're live, they're functioning, and they're scaling quietly while most of the crypto market is still arguing about memes and halvings. Where Bitcoin stores value and Ethereum runs decentralized apps, HBAR is positioning itself as the network that runs the core financial and commercial infrastructure behind the scenes. And if the Internet of Value really does become the new normal, that back-end role could make HBAR one of the most critical and most used assets in the world. Next, we'll move from Hedera's enterprise-grade highways to the specialized trade corridors of XINFIN's XDC, where blockchain is tackling one of the most complex, paper-heavy industries on the planet: global trade finance. XDC, the trade finance powerhouse. If HBAR is building the high-speed highways of the Internet of Value, XINFIN's XDC is paving the global trade routes. Trade finance, the process of moving goods, money, and documentation across borders, is one of the most vital, yet painfully inefficient, systems in the global economy. Right now, moving a shipping container from Shanghai to Rotterdam isn't just about cranes and cargo. It's about a mountain of paper. Bills of lading, letters of credit, invoices, insurance documents, customs forms. Each one passes through multiple parties, often across multiple countries, and every handoff is a potential delay or point of failure. This isn't just inconvenient, it's expensive, with inefficiencies costing billions every year. XDC attacks this problem head-on by tokenizing trade documents and agreements. Using its hybrid blockchain, part public, part permissioned, it allows businesses to digitize and share verified records instantly and securely. That means the importer, exporter, bank, insurer, and customs authority can all see the same tamper-proof version of a document in real time. Its delegated proof-of-stake consensus keeps fees extremely low and transaction times near instant, which is essential when dealing with high-value shipments where delays can rack up huge costs. More importantly, it's interoperable with existing banking and trade systems, something many blockchains can't claim. XDC isn't trying to burn down the old infrastructure. It's upgrading it from the inside. The network has already been integrated into platforms like TradeFinix, which connects small and medium enterprises with global financiers. It's also making waves with the International Trade and Forfaiting Association, ITFA, a major body in the trade finance industry. These aren't speculative partnerships. They're steps toward making blockchain the default language of global commerce. For investors, this is a critical point. Bitcoin's story is about store of value. Ethereum's is about decentralized apps. XDC's is about moving trillions in goods and capital through systems that, until now, have barely evolved since the invention of the fax machine. In other words, it's aiming for a slice of an industry where the market size isn't measured in billions, but in tens of trillions. From the cargo ships to the bank ledgers, XDC is turning the old trade routes digital. And while it works in the shadows of massive industries, its impact could be felt in every product on every shelf, anywhere in the world. XLM, the bridge for the unbanked. If HBAR is building the highways and XDC is upgrading the trade routes, Stellar's XLM is creating the footbridges, the ones that connect people who've been left out of the global economy entirely. Today, more than 1.4 billion people worldwide are unbanked. They don't have a savings account. They don't have access to credit. Many can't even store money safely, let alone send it across borders. For them, the financial system isn't broken. It simply doesn't exist. Stellar was built to change that. From day one, its mission has been financial inclusion, and its architecture reflects that. The Stellar network is open source, fast, and incredibly cheap to use. Transactions settle in a few seconds for fractions of a cent. That means you can send $50 to a relative on the other side of the world without paying $10 in fees or waiting days for the transfer to clear. But the real magic lies in Stellar's anchors, trusted entities that connect the blockchain to local currencies and payment systems. Anchors can be banks, money transfer services, or fintech companies. They issue digital representations of fiat currency on Stellar, which can then be transferred globally as easily as sending an email. This system doesn't just make remittances cheaper. It opens the door for stablecoins, central bank digital currencies, CBDCs, and even government aid distribution on Stellar's rails. The network has already been used in real-world humanitarian efforts, where speed and transparency are critical. Partnerships have been equally strategic. From MoneyGram integration to pilot projects with central banks, Stellar is positioning itself not as a competitor to the traditional system, but as the connective tissue that makes that system work better for everyone, especially those at the margins. Where HBAR thrives in enterprise boardrooms and XDC thrives in trade finance offices, XLM thrives in cash-heavy marketplaces, rural villages, and communities where mobile phones are more common than bank branches. It's not just about speed or low cost, it's about access. And here's the quiet truth. Bringing the unbanked into the global economy doesn't just change lives. It expands the entire market for every other network in the Internet of Value. It's the rising tide that lifts all ships. With HBAR, XDC, and XLM each handling different parts of the puzzle, the framework for a truly global, inclusive, and efficient financial system is already taking shape.